Hello, I'm Jerry Romine, and today's video is a step-by-step value investing guide for beginners that want to learn how to pick winning stocks. First and foremost, I have nothing to sell you, and everything I'm going to show you today you can do for free, absolutely on your own, and I'm going to show you exactly how to do it. The secret of a great stock pick is that you need to find a great business, and that's because as a long-term investor, you are literally buying a partial ownership of a company, and the more the company succeeds, the more you succeed. You can look at stocks like traveling on a train. All you have to do is find a train or stock going to where you want to go and buy a ticket. We don't need to overcomplicate investing, and most of the time, a simple and direct approach is the best way to accomplish our goals. So today we're going over 10 easy steps to pick great stocks, and in the video description I've listed all of the links that you'll need, and again, they're all free. And be sure to stick around to the very end of the video when I do a side-by-side comparison of two different stocks that'll really bring today's lessons home. Of course, I'm not a financial advisor, and this video is for entertainment purposes only, so grab a cup of coffee or tea and hang on, because this is not your normal stock channel. For today's example, we're going to be using the company NVIDIA, ticker NVDA, because it's a great example of a fundamentally strong company. And at the end, I'm going to compare NVIDIA to Shell Oil, and that should really be fun and enlightening. Step number one is we want to check the PE ratio. This is really easy to do, and you can find it on Yahoo Finance. The PE ratio stands for price to earnings ratio, and it's a ratio for valuing a company that measures its current share price relative to its per share earnings, what's commonly called EPS. As a general rule of thumb, the lower the PE ratio, the better. I consider stocks with a PE ratio up to about 100 to be good fundamental stock investing candidates. If the PE ratios are negative or over 100, then I treat them as growth stocks, and we evaluate those with different criteria. To find the PE ratio, you can do that for free at Yahoo Finance, and you just want to be on the Summary tab, and here it is right here, the PE ratio. So for NVIDIA, ticker NVDA, the PE ratio is 89.08. There's also a lot of other really useful information here, and you can scroll this page. For step number two, we want to look at the price performance over time, and we can do that at barchart.com. In normal times, I like to look at the one-year return because as a long-term investor, you want to buy and hold to achieve steady gains over time. However, 2020 has been a crazy year with the pandemic, so for that reason, I want to look at the last 6 months to see how the stock has recovered after the crash since March. If the stock has not performed well in whatever time period we are checking, that would be a red flag. One simple rule to remember when investing is the trend is your friend, and you never want to fight your friends. We're now at barchart.com. You want to search for the ticker, which is NVDA, and that will pull up NVIDIA Corporation. And then you want to make sure you're on the Performance tab, and that will bring you to right here. And then if we scroll down, we can see what the price performance has been over 5 days, 1 month, 3 months. In this case, let's take a look at the 6 months because that'll take us back close to just after the crash. And we can see that it's up 128%, which is a crazy amount. Over 3 months, they're up 28%. And in the last month, overall, they're down 4.41%. Step number three is we want to check the charts. A quick look at the charts will confirm the trend and let us know if the stock is moving in a nice steady upward trend or jumping all over the place. I like to use Webull, and I prefer the desktop application for charts, and you can download it for free and use it even if you do not have an account. Even better, if you create an account and fund it with $100, you get a free stock worth up to $1,600, and that's basically free money for using something you want to use anyway. On the Webull charts, and we can see that its 1 year low is 169.32, and if we look over here, we can see its 1 year high is 589.07. That's a crazy increase, and this train is definitely going somewhere that we want to go. I also like to use 20, 50, and 200-day moving averages, and if you want more information on those or setting up Webull, check out my Webull tutorial video. Now for comparison, we're looking at Shell Oil, which trades under the name Royal Dutch Shell, RDS-B. And here we can see the stock had a 52-week high of $62. When it crashed, it dropped all the way down to $19.19. And it's currently trading very low at $27.64. And this is a train we don't want to catch. It's going from high to low. Want no part of this. So as a long-term investor, you always want to check the charts. Step number four is the revenue growth. And this is the increase or decrease in company sales from one period to the next. If you're investing in a business, it makes sense that you want the revenue to be growing. To find the revenue growth, you want to go to Yahoo Finance. You type in the ticker NVDA, and then you want to come down and click on the Statistics tab. And this is one of my favorite pages on Yahoo Finance. There's a lot of great information here, and then you're just simply going to scroll down until you find it, and here it is, quarterly revenue growth of 49.9%. Another way you can find it quick and easy is by hitting Control F or Command F, depending on what type of computer you're on, and then that'll highlight it for you like it did here. And here's an insider tip for you. Anything over 20% on revenue growth for a fundamental company with a PE ratio between 0 and 100 is doing very well. Number 5 is the levered free cash flow, and this measures a company's ability to expand its business and pay returns to shareholders using only the money generated through current operations. If a company has levered free cash flow, we know it has enough cash to continue operations without needing additional cash, loans, or outside funding. This is an investing metric that most beginning investors don't look at, and it's a really powerful one because it really speaks to the company's strength and lets you know that they're able to conduct day-to-day business without any outside funding. The levered free cash flow is found on the same page, Yahoo Finance, the statistics, and then we simply scroll down and here it is. And we've got a levered free cash flow of $3.67 billion. Now in my own spreadsheets, I like to use a percentage so it's an apples to apples comparison with other companies, but since we're using free information on Yahoo Finance, the main thing is you want to see levered free cash flow and that it's positive. Number 6, you want to check the operating margin. This measures how much profit a company makes on a dollar of sales after paying for variable costs of production such as wages and raw materials, but before paying interest or tax. It is calculated by dividing a company's operating profit by its net sales. The S&P 500 average is 10.8%, and anything above that is good and below that is subpar. We're still on the same statistics tab, and we're just simply going to scroll down, and here we've got the operating margin of 28.56%, and that's almost 3 times higher than the S&P average of 10.8%. So you could say that NVIDIA is killing it on their operating margin. Definitely a beautiful operating margin here, and one of the reasons why I like this company so much. The 7th step is we want to look at the current ratio, and this is a liquidity ratio that measures a company's ability to pay short-term obligations or those due within 1 year. It tells investors and analysts how a company can maximize the current assets on its balance sheet to satisfy its current debt and other payables. As a general rule of thumb, under 1 for a current ratio is bad, and this means they could not survive 1 year without any income coming into the company. Over 2 is an ideal number to have. I also like to look at the total assets to total liabilities ratio, but this one is harder to find online for free. So for right now, we're going to focus on the current ratio. The current ratio is also found on the same statistics tab. We'll scroll down, and here we've got it. It is 6.09. That is an awesome number. It's much higher than the 1, and it's much higher than the 2 that we like to see. So definitely a real strong number here for NVIDIA. Number 8 is the profit margin, and this is one of the most important things that I like to look at when choosing fundamental stock winners. The profit margin is a ratio of a company's profit, which are the sales minus the expenses, divided by the revenue. The profit margin ratio compares profit to sales and tells you how well the company is handling its finances overall. Of course, the higher the percentage, the better, and we have to realize this percentage will vary depending on the business type and sector, which is why it's always best to compare similar companies side by side. For example, the business model of Amazon is much different than NVIDIA, and Amazon will have a much lower profit margin, which is to be expected. And Yahoo Finance statistics page, we're going to scroll down and we've got profitability, profit margin, 25.93%. Again, a great profit margin. In just a minute, we're going to compare this with Shell Oil, and you're going to see some huge differences between the two. Is this a train I want to board? At the end of the evaluation, you just have to ask yourself, do you want to get on board this train? And step number 10, be sure to check out the free tools at jerryromine.com. Here you can research stocks, learn proper money management in minutes, free portfolio tracker, and there are links to my best tutorial videos. And again, I want to stress, there's nothing for you to buy. Everything is 100% free. The nice thing about this step-by-step guide is that it's easy to do, absolutely free, and in the process you're going to learn a lot about the stock you're looking to purchase, which I think is critical when you're investing in stocks. Now let's jump into my spreadsheet and do a quick side-by-side comparison of NVIDIA and Shell Oil. The difference is huge. One is a fundamentally strong company and the other is in a lot of trouble. We're now in the beast mode spreadsheet, which is how I do my fundamental analysis. And if you're interested in getting a copy of this, just check out my Patreon page. Okay, the first one that we went over today is the PE ratio. And right now we're comparing NVIDIA versus Royal Dutch Shell. NVIDIA's ticker symbol is NVDA. Royal Dutch Shell is RDS.B or -B, depending on which system you're using. So for the PE ratio, NVIDIA is 88.32 and Royal Dutch Shell is -8.92. The second thing we want to compare is the stock performance. And I'd like to look at a lot of different ranges, so you can see all of those here. Let's just look at the year to date. We can see NVIDIA is up 106% and Royal Dutch Shell is down 57%. And if we looked at it over the last 6 months, it's 94% up for NVIDIA and Shell is down 16.21%. And again, what we're looking at on these side-by-side comparisons and all this data is ultimately we want to ask ourselves, is this a stock that we want to jump on board with? The third thing that we looked at today was the stock charts, and then the fourth thing was the revenue growth. So for the revenue growth, we can see that NVIDIA is up 28.28% year over year, and Royal Dutch Shell is down 30%. The fifth thing we looked at was the levered free cash flow, and NVIDIA is doing very well at 38%. Royal Dutch Shell is surprisingly doing okay at 8%, at least it's not negative. The sixth thing we wanted to look at was the operating margin, and the S&P 500 average is 10.8%, and we can see NVIDIA is killing it at 28.6%. Royal Dutch Shell is at 4%. The seventh thing we wanted to look at was the current ratio, and we always want that number to come in above 1. NVIDIA is strong at 6.09. Royal Dutch Shell is 1.24. And the last thing we wanted to look at was the net income margin, which is one of my favorites, and NVIDIA is 25.93%. Royal Dutch Shell is negative 4.3%. So when you're looking at these numbers, you can easily see which is the stronger company. In this case, the winner, hands down, by far, not even close, is NVIDIA. My goal today was to show you how easy it is to pick stocks on your own and how you can do all of the research for absolutely free. If you enjoyed today's content, please give me some YouTube love. And if you're new to the channel, be sure to subscribe and click the notify button so you don't miss any of this absolutely riveting content. And if you're interested in the Beast Mode spreadsheet, be sure to check out my Patreon group. If you have any ideas for me, be sure to let me know in the comments down below. And if you haven't already received your free stock from Webull worth up to $1,600, that link's in the description as well. Thanks for hanging out with me today, and I'll see you soon on a fresh new video.